What if one of the most written of COVID-era biotech names was quietly building a multi-billion-dollar antibody platform for indications like menopause, eczema, and autoimmune disease, while sitting on nearly $750 million in cash? Hey all, welcome to ShareTreck, where science meets investments, and I'm your host Raj. Friends, today we are breaking down AbCellera Biologics, which is going by the ticker symbol ABCL, which is a Vancouver-based antibody discovery company that's moved from pandemic fame to focused execution in 2025. And it gives me great pleasure to do this coverage as a Canadian myself. While making this video, I, however, had some challenges with the financial data and have selected what I thought was the best source. For instance, the ratio of shareholders differs widely depending on whichever source you look at. Therefore, in case you find any mistakes, please let me know in the comment section and I'll post a correction. That said, let's talk about ABCL. ABCL is a clinical stage biotech using AI-driven antibody discovery to develop new medicines in endocrinology, basically for women's health, immunology, and oncology. And this company is headquartered in Vancouver, Canada, and it partners with major pharmas while advancing its own pipeline. Let us look at their financial performance. As you can see in the table here, their revenue was $17.1 million, up sharply from $7.3 million a year ago. If you look at their net loss, it was $34.7 million, or around 12 cents per share, versus $36.9 million last year. In terms of R&D spend, it was $39.2 million versus $40.9 million in the previous year. General and administrative expenses came in at $19 million versus $20.2 million in the prior year. That's a modest top-line growth and tighter expense control, small signs of operating discipline, which I always welcome in companies at this stage. Friends, if you're finding this breakdown helpful, please press like. It helps others discover the channel, and you'll be doing me a big favor. Now let's get on to the cash position and cash runway. As of June 30th, 2025, ABCL held $553 million in cash equivalents, and marketable security. And this comes from their 10Q submission. And in the same one, they also said that they have about $173 million available in non-dilutive government funding. That's roughly $753 million in total liquidity. Their operating cash that was used for the first half of 2025 was around $44 million, or about $88 million if we annualize that roughly by multiplying it by 2. And at that rate, I would say ABCL enjoys a 6 to 9 year cash runway, depending on which liquidity figure that you use. However, I think that for companies like ABCL, it's very simplistic to calculate a cash runway like this. I've just done it for demonstration purposes. But always remember, these companies can introduce new therapies into their pipeline. And I think it's very important for them to keep on refreshing their pipeline so that as therapies get monetized, they have more to develop. And that could definitely increase the burn rate or the run rate. And therefore, the cash pipeline can start coming down. Also, remember, they can get some big pharma collaboration, which may give a sudden infusion of cash, along with commitment to do a certain amount of spend, which will probably increase their monthly spend. So keep those things in mind when I talk about the cash runway. This is based on a snapshot at this point of time. But what I explained to you is the potential for it to change. In a biotech market where many peers have 12 to 18 months of cash, I think 6 to 9 years seems to be exceptional staying power. So I will very much expect them to add extra candidates into their pipeline sooner rather than later. Now let's look at market valuation. As of October 9th, 2025, ABCL traded around $1.8 billion market cap as per my TradingView platform. And also if you look at Yahoo Finance, I think you'll find a similar number. These are dynamic numbers, but that's where it is right now. And I think that they have around 299 million shares approximately outstanding. That implies investors are valuing the company at just over 2 times its cash, meaning the market assigns limited value to its pipeline today. That could present an opportunity for long-term investors who are willing to take the risk. And in terms of pipeline, I had a quick look at their pipeline. There are 3 therapies in there. The first one is ABCL. 635. And it is for hot flashes or menopause symptoms for women. The mechanism of this drug is that it is first in class antibody blocking NK3R to stabilize KNDY neurons that drive hot flashes. And it is currently in phase 1 trial under Health Canada. First participants were dosed in mid 2025. I'll make a more detailed video on each of these therapies separately, but right now I just wanted to give you a quick snapshot. So this is the level of depth I'll go in for all the 3 therapies. In terms of global market, I was fortunate to get some information. I think the market size is between $4 to $7 billion and growing approximately at 5% compound annual growth rate, all the way up to 2030, according to some market reports. And current options or current standard of care is hormonal therapy or low efficiency SSRIs. This is a large underserved population seeking non-hormonal alternatives. And that's where I think this therapy can succeed if it gets approved. The next one is ABCL 575. It is for atopic dermatitis or eczema. It's a skin condition. The mechanism of this therapy is anti-OX40L monoclonal antibody designed to reduce Th2-driven inflammation. And this would be a 6-month dosing cycle, which means a person might have to take it once in every 6 months. It's in a phase 1 study authorized by Health Canada. First volunteers were dosed on August 2025. So we have to wait and see what the results are when the interim data is released. I don't have a date for interim data release as such. If you look at current standard of care, there are 2 competitors, dupilumab and JAK inhibitors dominate, but they don't cover all patients. There is room for low-frequency, better-tolerated biologics, and that's where this therapy will fit in. Then finally, we have ABCL 688 autoimmunity program. The company describes it as early-stage ion channel or GPCR targeted antibody, and it's in the IND or CTA enabling studies, and it's not yet gone into, in other words, it's not gone into clinical trial. They're doing the initial work. The mechanism has not yet been disclosed, so there is very little information. It's just one line in the pipeline. I'll find out more details about this and the market potential and all that if this becomes a pipeline item in clinical trials. Now, if you look at the current status of all these 3 therapies as of October 2025, I would say that this company has so far not had any FDA breakthrough or priority review designation or BLA filings yet. It may or may not come, but right now they don't have any special designation or BLA filings. Both ABCL 635 and ABCL 575 are in phase 1 under Health Canada approval. The first human data is expected mid-2026, that middle of next year. So no catalyst till then. So these are early clinical bets, not near-term commercial stories as yet. So any investor with a very long-term view and high risk tolerance can probably look at ABCL at this point of time. I was trying to establish what is the ownership control. I would like to see how much of institutional ownership and how much of insider ownership is there. But I got very conflicting reports from various sources. Right now, I would give you some range. I think institutional ownership sits somewhere between 30 to 50%, while insiders, including founders and executives, hold between 30 to 40%. That alignment, I think, keeps management skin in the game as they execute on the platform strategy. And as a investor, as a retail investor, my personal opinion is that ABCL remains a long-term, long-duration story. Its strength lies in its AI-driven discovery engine and strong cash position at this point of time. Execution now depends on clinical readouts and new partnerships. And from an investment standpoint, low burn, high cash, early pipeline means optionality with patience required. And again, I would say that when you look at companies like Tempus AI trying to play a big role, I think that adds additional risk and competition to companies like ABCL. That said, I think if an investor is looking at a long-term position, they should consider their risk tolerance and do their own due diligence on this stock before making any investments. And friends, these are all my personal opinions, not financial advice. And the reason I'm making this is to give you an insight into my thinking as a retail investor. I've always wanted to know how other retail investors think, and I was not getting that information anywhere. So I decided to create ShareTreck, where I share my own opinions and thoughts as a retail investor. And the idea is that I want other retail investors to watch my videos, read my Substack articles, and give me feedback so that we can develop a community of retail investors and crowdsource trade ideas and market intelligence and bounce ideas off each other. So please be active in the channel. Subscription to the YouTube channel is free. Subscription to the Substack is free. And link to the Substack is in the description. Please check it out today, become a subscriber, and read in-depth articles on every video that I publish out here. Thanks and have a great day. I'll catch up with you again very soon. Please don't forget to press the subscribe and like button. Bye for now.